All right, guys, before we get going with Peter, I just want to go over what's going on currently. All right. Tariffs are still driving this market. Downside when they think there's going to be conflict between us and China or any kind of trade war, and then bullish when that gets pulled back and there's a relief rally. This morning, overnight, Treasury Secretary had some calming words about deals being worked out with China, and we had a nice rally late yesterday overnight into today. And then 9 minutes after 9 Central, comment that created some potential conflict that the U.S. government could create emergency, law that they, I'm not going to go back and read it, but if you look at just after 9 Central, the market sold off, and it wasn't coincidental that it sold off because of that comment. All right, let me go and read this now. U.S. government reportedly consider using emergency law to restrict China takeovers as part of an effort to protect U.S. tech sector. That obviously isn't bullish. How bearish is it? Well, it's bearish enough to take us down about 15 handles. Point is that's the driver right now. A few weeks ago it was inflation. That's what created the initial pressure to stocks. And now you're getting into these potential trade wars and the uncertainty that comes with it. Now, Trump could have the U.S. coming out smelling like a rose, avoiding a trade war and creating a more business-friendly environment for U.S. companies, and therefore U.S. stock indexes will benefit. So let's know that. Let's understand that. Let's know that any tape bombs shouldn't be tape bombs. Or we call them tape bombs because they could drive the market north or south pretty quickly. Let them not surprise you. Now, we're going to bring in Peter, and I'm going to introduce Peter that most of you guys know him. He's in the team room often. He's also from Chicago or outside Chicago. In fact, he's been rated the number 2 smartest guy in the state of Illinois, which is pretty impressive, Peter. You there?
Yeah, never been accused of being one of the smarter ones in the room. Clever, though.
Yeah, well, about that, though. Clever, smart, but all right, well, you're smartest in the room, second in the state. You're moving up either way. But what I wanted to do is, from time to time, we have these trader spotlights, and Peter has done it once or twice, and I just like to circle back to see either how he's doing and what his input is from a perspective angle over these markets with current events type of thing. The other thing, Peter, is you've been trading for how long?
Full-time-ish, about 9 years.
9 years. And then you joined the Edge almost 2 years ago, right?
Yeah, 2 years ago. Uh-huh.
Oh, wow. That's gone by
fast. A little over 2
fast.
years now. It has been going fast, isn't it?
And you're in the team room a lot, right? You still come there
most of the time, most every day.
What's the benefit of a room like that for you?
Like when guys are watching different markets. Like, I mean, just the other day, as the trade was progressing, I think Dave Metters called out something he was seeing in the over the DAX, and that was actually very helpful. Actually, I actually paused pushing a button based on that input, and what the right thing to do was flip the logic around the other way, because that market was actually leading at that point in time. So I think some of that, during the trade, just as trade is developing, that sort of those observations are really beneficial.
Well, it's just
not so much like if someone says they want to get long, they want to get short. That's not really beneficial. That's not really matters. No one should care what another person really is doing, long or short. But what's really more important is the kind of like the overall, the context of what's happening.
Well, I mean, here's the thing: in a real prop environment, which is what that room has been meant to recreate, and it does pretty well. From time to time, you get the sense if someone's long or short. If you're in a physical room, I know I did in a prop firm.
Yeah.
You could tell by
Right.
someone's,
Sure.
reaction. But you have to assume whether you hear it live that someone's long or bullish or someone's short and bearish. Listen, there's always someone with an open position, short or long. And it's like, that doesn't matter. What matters is location and risk management,
Right.
understanding context. So you're 100% right. Just knowing someone might be long, even if the guy is really good, that still might not help you, because where did he get in? When did he get in? How is he going to get out when he's wrong? And if you're quicker getting out when you're wrong, you're better managing your risk. And I don't mean physically quicker, like you could click the mouse fast, but you're not risking a heck of a lot more than you're making, whatever that target loss is. You got your profit target, but your stop loss. Are you quick
Right.
from, away from your entry? Now,
Right.
do you come in the morning? And I really don't know this, but do you come in the morning? What do you do to prepare when you sit down?
The first thing I do is go over the Globex trade, where we're at in relation to the previous day or the previous couple of days if we're outside the range. I look for a profile that we seem to be working against. I look for a day that we seem to be kind of working against, so I can kind of identify what support resistance might be. So similar to what you do, and when you come in the room, when you open up the trading room at 8 o'clock, you typically go to like a 24 PNF or a 12 PNF or daily. You look at an ancillary market, see if there's something in particular that's leading that day. And then kind of develop my levels from there. You look at where's the value been being set? Are we is it constantly increasing, so we're trending up? Is it value constantly decreasing? We setting new value area lows every day, so we tend to be in a downward down leg. So kind of get a sense for it like that, and not much more than that. Because the only other thing I'll look at is I'll kind of look at like where put call ratios are at. To see if like sentiment is really leaning to one side of the boat too far. So I know if I have a tailwind or a headwind.
I like that.
Honestly, and that is about it. And that is probably the most dramatic change since I've joined your program. I've really filtered down from a lot of the other BS I used to read to really try and distill it down. There's one or two other people I read or tap the markets that I know of that are professionals. That write letters and stuff, but that's it. I don't really dive too much into that stuff.
So you were guilty of over preparing.
Oh my stars, Anthony. Yes, I still have a logbook, a record book where I would write up my impressions of what I think the day is going to do and such, and those are my own personal trading notes. It's kind of like my own little system, and that used to be very involved where I was tracking certain stocks and stuff like that, and I don't do that anymore.
So it goes to my point where if you prepare a lot for an opinion, it's going to be really hard to change that opinion.
Oh, it's damn hard.
When you're wrong.
And and then so like guys will know, most people know that I'm guilty of typically trading from the long side almost exclusively. All right, and I don't flip too often. I will occasionally take a short or flip all the way around and be short for a day, but I'm more comfortable just generally. And right now, the past few years it's worked because that's been where the tailwind's been, has been to the upside, except for a few months here and there.
How have you done over the last few weeks where we've had some really high volatility to the downside?
Done okay, because I've had a few shorts in there, but you tend to get patient when you know that there's a lot of movement down. And if you're a little bit late catching those transitions, I think the reason why I don't do more shorts is because I'm typically a little bit later catching transitions. I'd rather be taking profit into those transitions than trying to initiate a position in those transitions. So as long as I'm more patient with it, I can take the nicks, knowing that I'm going to get my reversion eventually, and so I don't get too worked up about that. I've had a few losing trades because when I get a good one, and I can really hold on to a piece of it for a while and let it run, then I'll be okay.
Well, that's important. You're not afraid to get in that third trade, right? If you've had back-to-back losers fighting a downtrend.
Yeah. Yeah, as long
You're
as you keep to your, what your core idea, your core
right.
trading strategy is, you'll be okay.
You
Unless you're a complete dingling and your hit miss ratio is, 10%, which nobody can be that bad because it's really almost a 50-50 proposition at any point in time. But we get our little edges here and there, and where we get better statistics the statistics begin to work to our favor. So you just stick within your strategy. You'll be okay.
you don't want to create where you have a setup didn't work, had a setup didn't work, and because you had two setups that didn't work, you create a third setup just to get it back. You have to make sure the third trade after back-to-back losers still, fits within your core
Right.
strategy, as you put it.
Yeah, if it's as long as you're staying true to that, you're not, as you say, sometimes you're reaching. If you're trading up here right now for this, you're reaching because it's already moved quite a bit. You need to stay away from those reaches because those
No,
will be what
yes.
kills you.
And that's the anxiety. You reach because you
Yeah,
want to be involved and you already
right.
seen what you should have been involved in already.
Right, you're pissed. Your monkeys on your shoulder are barking at you because you're really late, but it's gonna go higher. You're gonna miss this one, and so you want to get in on it. You get on it, and then it goes against you. And it goes against you only a little bit, but it goes against you, and because you've already had a couple losers, here's your next loser.
Yeah. And then it goes up.
Uh, all right, because you didn't wait for the right entry point.
You got anxious. That's what the missed trades and losing trades. You got to focus and be very, very cognizant of what you do next after missed trades and losing trades. And losing
Yeah,
trades,
exactly.
well, it's easier to know when you have a losing trade because you had it. But a missed trade, like I've always said, is invisible. You may not realize you missed it because you missed it. You don't have a P&L or a stat because you didn't take it, but yet you ended
Right.
up doing something pretty dumb. I don't like when someone plays it aggressively more from the long side. Um, I think that's great because what happens in a sense, especially if people are having a lot of trouble stacking probabilities to pick direction and they're getting real anxious because they really don't know up or down. If they just
Mm-hmm.
practice from one side, and again, I
Mm-hmm.
wouldn't do it in a real account until because you're practicing, but if you just practice from one side and worked on locations, you strip the anxiety of where it's going because you're just
Mm-hmm.
like, it's going to go up and I'm
Mm-hmm.
going to find good locations to manage my risk when it doesn't go up and I'm long.
Yeah.
And that's what you do, right?
Exactly. Yeah, and exactly right. Because I realize so there's what 250 some odd days the market's open a year. Realistically, since I do this full time, I probably trade close to 200 days a year, a little bit more than that. I'm gonna have days that don't work out, but I still have 200 days in the year.
You priced in that. Yeah, it's like a marketing outlay. You've
Yeah.
accrued. Losing trades are like accruing in another business for marketing
Right.
or taxes or rent or whatever. So
Right.
look at it that way. You don't get so beat up. I lost money today or this week. Well,
Right.
you pay taxes and you pay employees if you have a business and rent and everything
Right.
else. So as you look at it that way, I think it files down the anxiety and the anxiety or
Mm-hmm.
the hatred. You just hate losing days and losing. Well, you can't hate them. It's got to be part. As long as you stuck to your strategy or setup and go
Right.
from there. But you're using a lot of. Are you watching transitional moments, whether they're mine
Mm-hmm.
or yours?
Yeah.
Are you looking at what point and figure charts when the day starts? Or
Yeah, yeah. I have a peanut. Yeah, I usually typically use like an 8 PNF chart mostly. I don't the 4 and the 6. Um, I'll kind of say the same thing to me. So I typically will use a slightly longer point and figure chart.
so if someone were to ask you, let's pretend like we're all very new, um, and not we know a little bit about trading, but not much. How would you explain to me what you look for to get in a trade on the long side? Let's say, what do you look for?
I look for basically for selling to be drying up. All right, so I look for those areas where, in the past we've had an interest in selling drying up or new buyers coming into the market. And so I'd be looking in those areas primarily.
How do you
So,
how do you know selling is drying up? From a delta calculation or what? I mean, what do you?
Well, yeah, I mean, you can see it in the footprint. You start seeing all the big numbers become small numbers. And when they start happening in areas that you've seen that in the past, you should get real interested in finding a place within that in that area to get into the trade.
You look
Or
at
you see it moving up, so it's already, let's say it's already bottom. You didn't catch the bottom. I don't catch every bottom either. Um, it's not healthy to try and catch every bottom. Some bottoms you need to let them become bottoms before you get into the trade,
right.
especially on the big down days. Is that when it starts to test those areas, or it tests a portion of one of the bigger bars that made that down move. You can see within there where that absorption starts to take place, where those sellers come in and they pound it, they hit it really hard, yet they can't get price to go down. So they couldn't get price to go down. Prices are going to do only on one other thing, and it's going to go the other way.
It's almost like a delta divergence, higher, a
Yeah.
redder delta, but not a redder price in a way,
Right.
not
Yeah.
a lower price.
Yeah.
I like
Yeah.
the dry up lingo, like because in order to go up, you need selling to get exhausted and dry up, right? I mean,
Right.
that has to
Right.
be one of the dynamics that happen.
Right.
Is it almost like if I were to show my screen here, you able to see my screen, Peter?
Yeah, get it in front of me. Uh-huh.
All right, so if I like show a 4PNF, do you ever look at whenever it flips? All right, do you ever look at
Right there.
this
Uh-huh.
delta at the bottom, right?
Yeah. Okay. So we did one of these last year, and I used to have exactly that at the bottom, that delta bar, the footprint bar statistics or bar stats.
Right.
Depending on what program you use, they call them different things. It's the same thing. I took that off because I'm just been so focused over the past few years of reading the footprint. I don't need that information as much anymore, but it's good information to have because you can then get a sense for, is the market really short or really long? And so you can get kind of a feel for if there's a tailwind or a headwind to the market. Because if the market's really short, you're going to want those people to get scared and start covering as price begins to move a little bit higher. And if we made a big run and it's really heavily green, then you're probably thinking, well, there's probably a little bit of a headwind here because those longs are going to want to get out of their positions. As you say, once you're a buyer, what are you? You're a seller. Okay, so so that's good information to have, but so I suggest using that if people need to use that. There's nothing wrong with that, but I see exactly what you got down there.
Well, whatever it would take to identify the sellers, right, or the buyers. It's like if they're drying up, you want to see. For me, I want to see if you're picking a bottom in something, then you're gonna want. It's almost like for it to be a bottom, there has to be downside in prices first, and for a curl. But in order for it to be a bottom, to get anything on the upside, you almost have to have like the selling get a little lighter, and then one instance, and you mentioned it, where you get a lot of selling.
Right, exactly. Right where your minus 691 is. So that's a really good. That's a 4 chart. It looks like it's a P&F 4. Yeah. Right. So that's great because you get a big delta down on that bar right there, that number, and then then you got these tests that came over here where those deltas were like minus 151, minus 95, minus 125. So you can see right in there. That's exactly what I was talking about before. You start seeing those numbers get smaller and smaller, right? So on the price bars from 71.5 down to 71, you start seeing those numbers get smaller. So we kind of have a joke in the room I use every now and then. Look, you know what? The only way you're going to get long from this right here, if you don't see it, is if I send you a Western Union telegram. Okay. It's a prop room, right? So we're a little bit brutal once in a while with each other.
And it should be.
Yeah. So, but it's like, look, are you looking to short that? So I'm not sure what your intentions are.
It's almost like if it went, it should have went.
Yeah, you're gonna need a whole bunch of new sellers in the market, and maybe appropriate to expect that if there was some sort of a news headline. But absent something like that, I'm seeing basically selling drying up.
So if you're not going to get long, don't get short.
Unless you have a reason to expect it to go down. And I don't like to take those trades unless I say we're working a news headline because something new came out and we know it's really bad.
I think that it goes back to um, whatever you pick to use, make it yours and make it consistent.
Right.
So you're not supposed to, someone isn't supposed to use every ready, aim, fire part of Peter's process, but maybe one of them. And that's what these conversations are about. Something to raise your eyebrows and say, all right, selling drying up. What can I use to recognize that? Because you need that to find a healthy long location. If selling isn't drying up, it's not a good long location. There's more that could
Mm-hmm.
come.
Mm-hmm.
And it goes back to where those guys are stuck. But then you don't want to get caught into looking at too much. Or here's a big problem that I think of a lot. Sometimes you use it, and sometimes you don't. That's dangerous. When you know what I mean? When you're
Yeah, you
using
can't be
something.
changing your screens all the time. You really, and you know, if you, as you're new to this, then of course you need to be changing your screens a bit and on that. But once you kind of like, what just the screen you have set up right now is a great screen. I think it's a great um, screen that you can use for a long time until you begin to see certain things in the marketplace that you begin to identify and they then become your trade and your contribution to the trading room. Um, but you've got an ancillary on the right hand side. You got two different ones. You got the oil and the Nasdaq. I typically use like oil and the Dow because they correlate a little bit better in my mind. And then, but you like these and these work for you, and that's great. We got some guys that use the Nasdaq and some guys that use the Dow. But most everybody uses oil, and some guys I think I've heard them talk about bonds too. I don't like bonds that much because they don't really correlate that well on
No.
an intraday basis, but on a longer term frame, sometimes they can. But you just look at any correlation matrix, and bonds are like in the lower half.
The
The
only thing
correlation.
find helpful for bonds is it gets real busy or around
Yeah,
FOMC statements. But
yeah, yeah.
interday, you're right. You got to take a step back from it. And
They're not, yeah, not as helpful. So you've got all the, these are like, this is the, I call it, these are like the core elements right here. And then you got the big lots on the bottom of your filter.
but
Um,
you're 90%, 80% long as far as opening positions. You'll open up
typically,
80% of your
yeah,
positions from the long side,
I think that's fair. Yeah,
and you don't get killed on big down days, but you do well on big up days. Is that fair to say?
absolutely.
So if
Yeah.
we're up 30, 40 points on the day, Peter's done a good, probably,
Uh,
right?
yeah, I've done okay. Yeah.
What's your biggest strength as a trader? What's
My biggest what?
your biggest strength in a word or a phrase as a trader
Patience.
that's kept you around? Patience
I think
to
patience. Yeah.
yeah, but that's one word. But
Yeah.
why patience? What's patience? You mean patience uh to do what? To wait for your setup to set up?
Yeah, to basically to wait for it to come into an area where I'm comfortable initiating position in. Yeah.
So you want to get long, but it's a little higher than your area or whatever.
Exactly.
You're
Yeah,
good
and
at being patient.
I'm not willing to take the heat if I'm
Good.
wrong, and I'm willing to let it go if it gets away from me. Okay, so be it. There'll be another one.
Because
It's a
that's
long
important.
day.
Like I
It's
just
a long
asked him
day.
for one word and he gave me patience. And a lot of people out there will say patience and they don't drill it down into, well, patient at doing what? Patient at, um, just having less trades or patient at,
Oh,
making
yeah, and I don't.
patience at your setup, I think is perfect.
Right. Yeah, I mean, I don't worry too much if I have like 5 trades or one trade or 15 trades. In fact, well, I can't. I don't have. I haven't done the complete rundown on this in my statistics, but
Right, right.
my guess is that when I have days that I've got like 15 or more trades, are probably not generally my best days.
Wait, say that again.
I said trade when days when I've had a lot of trades are probably not my best days.
That's
So the
interesting.
days when I have the fewer number of trades are typically probably my better days.
I think the lesson
Yeah.
here is you've been doing this for 9 years. Um, and he has a setup that he's patient to wait for. And I think the takeaway from this half hour is um, have something that reduces and maybe eliminates the anxiety of direction.
Hmm.
Doesn't mean you got to be a bull or a long all the time like Peter, or a bear and a short all the time like some others. You can go back and forth. But something's got to be objective so you make the decision and not feel anxious about being right or wrong. I'm pretty objective making these transitional calls back and forth on a short time frame because I'm letting the market or the pattern show me that, or else I wouldn't be able to squawk it out to people in a room.
Yeah, exactly.
It'd be too hard because you're if you're attached to your opinion, which we all are, you don't want to get it stepped on. And as soon as you put it out there and you're wrong, you feel like you're just getting stepped on. Nobody wants that, right? Nobody wants to stand in front of an audience and be wrong.
That's a hard thing to do, right?
And I couldn't host a room. Nobody could if you were personally attached to the opinions of the market. It's like being a third grader and having to go up to the board and you can't get the answer right and you're struggling. And now guess what? The teacher's trying to help you. You ain't even listening to her because you're sweating and you're embarrassed and your whole world as a third grader is your class. So you got to find a way to strip out that emotion of being at the board in front of the class and getting it wrong. And that's the problem. People are not good at stripping out anxiety. The tech sector seems to be so much weaker. I mean, the NASDAQ, if you look at real time here, making lows, and we're 12 handles above our lows, the ES, right?
Yeah, I see that.
It's drawn, they're drawing it lower though. So Peter's got to run here at 11:30. I don't want to keep you any longer, but I'm glad you stopped. I like to do just this, impromptu stuff to not only give people a little extra dimension on Peter, but also, just to have a good conversation. So thanks again. I appreciate you stopping in.
No problem. Anytime, man.
All right.
See you tomorrow.
You betcha.
All right. Cheers.
Thanks, man. So that's that with Peter. Just to recap, though, not about what him and I talked about, but the current conditions. As we were talking, I heard him squawking in the background. I don't know if it's a coincidental. No, I think it might have just been German Chancellor Merkel advocates for a rules-based trade dialogue between U.S. and Europe. So, again, more trade war talk. That doesn't seem to be pretty bearish, but whatever. A little background on that 9:09 comment, because it came 9 minutes after 9 Central. A little more detail. Considering using the 1977 International Emergency Economic Powers Act, under which the president could declare a national emergency that gives him powers to regulate commerce, block transactions, and seize assets. It could also be used to block Chinese investments in sensitive technology sectors in the U.S. That was a very important comment that got us bearish quickly, a little after 9 Central. And that's why they hit them, because that's important. That's what these meetings once a week are important. If you're not involved in the team room or the trading room, you got to make sure unequivocally if there's something driving the market, what the hell is it, and how can I jump on the opportunity from it? No trade war good, trade war bad. Keep it simple. That's what's driving us. Inflation hasn't gone completely away. That could uptick when we get CPI and PPI numbers mid-month next month, but that's a couple weeks away. We're leaving March. Next week will be April. If I don't see you guys and you celebrate Easter, have a happy Easter. Room guys, we'll see you tomorrow. I'll put this recording up in a few hours. Thanks again, Peter. And I think these conversations with different people are good. Even if you're not, like Peter's been trading well and he's a 9-year trader, but even for someone who might not be trading well and trying to figure it out, it's good to talk. So if anybody wants to do this once in a while, talk through stuff, do it. It'll make you feel good about seeing what people think of your idea. You got an idea, but you haven't tested it? Talk about it. And I'll make this a venue in which to do it. You'll feel better about it. You'll be able to vet it out a little bit and get some opinions on it. That's a good idea, but I'm not going to chase people down to do it. You're going to have to want to do it. But that's what these meetings partly are for, is to assume that we're all in this room together, looking at each other, talking to each other, and trying to figure out if you're in a rut, how the hell to get out of it. If you're on the close to really getting something, what is that? And what the hell is working for someone else? You're not going to learn everything in 30 minutes or an hour in these meetings. You put it all together and you learn a massive amount of stuff. We'll see you guys either next week or tomorrow.